Hello everyone, I am Flo from Excel Software. Today I want to share with you the AutoCount Unrealized Gain Loss Multi-Currency module. For this module, you actually need to first understand what multi-currency is. So I previously recorded that multi-currency module 1.0 and 2.0 videos. If you don't understand what multi-currency is, you can watch these two videos first. Go to our YouTube to find these two videos and first understand what AutoCount's multi-currency module is. So here I will briefly explain what the multi-currency module is. In some situations, like the invoice we issue to a customer or the invoice our supplier issues to us, it is from abroad and involves import and export. When doing import and export, we usually use foreign currency. But we do business in Malaysia and we use foreign currencies, US dollars or Singapore dollars or currencies from other countries. So in this situation, maybe the invoice was issued at $4, but when the payment is made, it's $3.80. So there will be a time difference, that currency difference. So if this is checked and he pays back at $3.80, we call this realized. But in many situations, at the end of the month or year, those invoices are not paid. And in this case, we call it unrealized. The auditor will usually ask us to calculate that account because sometimes the amount is very large, from hundreds of thousands to tens of thousands. An unrealized gain or loss, 0 point something percent, 0.2, 0.3, that currency difference already significantly affects the entire account. In such cases, the auditor will ask us to regulate our account. There are two situations with AutoCount regarding this unrealized gain loss. There are two methods. One method is to reverse the journal in the next month. The other method is not to reverse it in the next month. It accumulates, adjusting up and down, maintaining adjustments every month without reversing. So depending on the auditor's requirements, we can handle both methods. Is this a method? Let me show everyone and explain these two modules in our system again. So here you see, in AutoCount, the unrealized gain loss has two names, two different modules. One is the unrealized gain loss module and the other is called the advanced multi-currency module. So for multi-currency, this is realized and this is free. When you purchase any AutoCount package, it is already included. Then there is the realized gain or loss multi-currency module, but for unrealized, it adopts two different approaches. The biggest difference between these two approaches is that unrealized gain loss can reverse your journal and it will reverse it in the next month. The other is the advanced multi-currency, which does not reverse. The more commonly used method is the unrealized gain loss approach. This advanced multi-currency, which does not reverse, is only set for certain countries, only for those with specific financial reporting standards that use this non-reversing journal method. So in AutoCount, these two modules, if you are unsure which module you need, I suggest you directly choose the advanced multi-currency. If you choose this module, it adds two new functions: foreign currency revaluation and unrealized gain loss. So foreign currency does not reverse, unrealized gain loss does reverse. So if you buy unrealized gain loss, it only includes the unrealized gain loss module. But if you get advanced multi-currency, it includes both modules. So generally, the concept of unrealized gain loss is like this. Let me go into the AutoCount features and explain how to operate these two modules. First, you must use the program control module setting. You must have one of the modules, unrealized gain loss or advanced multi-currency. If you only purchase the unrealized gain loss module, it only provides one function. If you get the advanced multi-currency, then you have both. However, for these two modules, I guess you must have multi-currency. If you don't have multi-currency, you can't use these two modules. So there are two methods. Well, one is unrealized gain loss, which involves reverse journal, and the other does not involve reverse journal. So let's first talk about how to operate the reverse journal.
For unrealized gain loss, each time you do evaluation, you must first log out all users. This is our system's recommendation, so logging out is the best.
Then after exiting, here you see the journal, what number you plan to put in the journal, what number to put in the reverse journal. You decide this yourself. If you have different numbers, you need to set them. Usually our valuation is at the end of the month. So here in the description, you can write anything if you want. To make it easy to understand, just write it. Then here you see there will be gain loss and GL gain loss. This GL gain loss is usually for those bank accounts or some finance accounts, those loans, liability accounts. If these are in different currencies, they also need to be valued once. And you don't have to reverse this valuation. So you see this reverse actually refers to those items in the balance sheet. So if it's your purchase invoice and sales invoice, the items in the profit and loss, it looks at this gain and loss. So gain and loss generally, usually you can follow my method. In the GL account, you can split into two different foreign currency revaluation accounts. You can put realized gains on foreign exchange and unrealized gains, or realized loss and unrealized loss. I'll split them, so it's easier for you to see how much is realized and unrealized. So you see this realized is because he paid back, so it is confirmed as realized. Thank you. If during our valuation, so this gain, this is profit loss, this is balance sheet. So gain here is usually unrealized. It will fluctuate every month. So you can put unrealized gain and unrealized loss. This is if it's a bank account. Generally, we just confirm how much it rises, we just rise that much. and fall that much. So generally, we just directly realize it, so you don't need to reverse. Don't reverse. Then this can be put as gain and loss. Up to your auditor. If you want to reverse those accepted accounts, that's also fine. If not, you just directly realize. Start the revaluation. If there is a revaluation, it is divided into two parts. These are usually bank accounts, liability accounts. These are usually those purchase invoices and sales invoices, which are the accounts receivable and accounts payable. So it's not just sales invoices. You see, for deposit AR, some documents are not yet coded in the invoice. So this deposit will also be revalued. It's based on the document's deadline revaluation or document deadline revaluation. So I set it to 4. Use 4 for revaluation. So if there are no issues, I'll just save it. So here you can preview the entire algorithm, how it calculates the whole account, which document it is, how it is revaluated, and you can print this out for the auditor to check. So when we go to the profit and loss account, you see there is a difference between the 30th and the 1st of November. Then on the 30th and 31st, it is like this, 240 and 100. But when it comes to November 1st, you see that the unrealized is gone. Oh, unrealized is gone. So if you look back at the journal entry, there are 2 more here. Oh, this is 425. But when it reverses, it becomes 340. So it's a little less. Less of what? You see, it actually lacks this bank account. Okay, bank account revaluation. So if you notice, actually in my multi-currency video too, I mentioned that some adjustments need to be made for those bank accounts. Why is it like this? You can watch my video, okay? We'll explain why we need to manually make adjustments when doing revaluation. But if you have this auto count for unrealized gain or loss, you don't need to make this adjustment, okay? We'll automatically make this adjustment for you. So just now when I directly valued more, and when valuing, I didn't want to reverse, right? It's actually the same journal, the same concept, the same journal. Okay, say if in November or November the same, we need to once more.
Okay, see in the bank account, it is actually 0 because we did not reverse. So, but these regular AIPs are still revalued once more, okay? Then they are reversed once more. Then you see this situation. So it is 340. Oh, this kind of general. This is in the case of unrealized gain loss. Okay, see this unrealized gain loss, you still use it, it will reverse that general, right? So actually, there are some situations where you need to adjust the previous currency rate. It is actually allowed, okay? The system's design, it will be allowed. If you any invoice, if it has been paid before, it will be revalued again, and it will its official receipt again. Okay, if it has an official receipt, if there is no official receipt, it just adjusts the rate. But because the journal is reversed, it doesn't have much impact. If possible, try not to change the currency rate. Okay, foreign currency revaluation cannot be reversed. Okay, now I will explain this foreign currency revaluation to everyone. Okay, we'll delete this unrealized gain loss. Okay, after deleting it, we then use this foreign currency revaluation.
And so, choose one of them. Don't run 2 revaluations at the same time, otherwise it will take very long. Then, for this foreign currency revaluation, it's also recommended that you log out your user first before doing the revaluation. All users should log out, okay? One person to do the revaluation, this is the most proper method, okay? For the description, you can put whatever you want, and for the date, just put the end of the month.
Generally, we do revaluation once a month. And here you see it only has 1 gain and loss account, okay? Reason is that it doesn't do reverse, so we usually put it as realized. Anyway, it already, you want it or not, it helps you realize that on that day, okay, that day's currency rate, okay? Whether you want it or not, it directly puts you on October 31st at 4.0.
So in this situation, you see it does not give you the option. Oh, the bank account can reverse. Other accounts, AIP reverse, but not the bank account. No. So this is all not doing reverse, okay? You see it changes from your previous rate to the current rate of 4.0, okay? The rate was 0.1, 0.2, changing you to 4.0. Directly to this journal, okay? You can print this report for checking, okay? So this situation, look at the profit and loss statement here. So first look at the journal. Here it only has 1 journal and it doesn't have the reverse journal. It only has 1 journal, revaluation.
Okay, it also added into the profit and loss.
Okay, the gain dot loss here added 425. Then this is realized. This is the officially received repayment. This is our valuation. Okay, so there are 2 transactions. Then you go to November 1st. You also see that there are only these 2. Okay, just these 2. They have not been reversed or reduced.
Okay, so when we do the November, so when you reevaluate, you see if all of these still haven't changed, it will be 0, gain loss will be 0. If it fluctuates, it might go to 4.1, okay? You just 4.1. So in this situation, on November 30th, when you look at the valuation, it goes from 4.0 to 4.1, okay? So it's not from the original document. It follows the rate from your last revaluation, bringing in the new rate. Okay, so this is November.
So you see, this has not been reversed. Okay, since it has been reversed, this is the final rate for this month, okay, November. So if you really find that the previous invoice rate has an issue and you want to change it, actually it is not allowed because it is not the unrealized concept. Since unrealized can be reversed, you can still change it.
But this is realized, basically once it is changed, it is very difficult to check what the initial value was from what to what, and second time from what to what. So it has a big impact. And in this situation, generally, you are not allowed to adjust the invoice or those documents that have already been processed if you are using the advanced multi-currency foreign currency revaluation module.
Okay, so the concept of the entire AutoCount foreign currency revaluation is actually very simple to use. As long as you understand its concept, it's okay. It's very simple to use. You just need to understand some logic, understand some concepts. So I hope you learned something from our video. If you have any questions, feel free to contact us. Thank you, everyone.